Hello, folks. Brandon Chapman with today. It's another Monday edition of the Thin video for TheoTrade. It's good to be with you on this wacky day. I mean, the market's up nicely, about 0.71%. Of course, Tesla steals the show as the S&P finishes near a pivotal level. That pivotal level, if we look at the SPY as a proxy, is about 460. We're just barely inching towards that point right now. And this is where the risk starts to amp up, right? Where the opportunity, maybe we take out 460 with a chance going to 480. What's the downside at this level? And we'll kind of look at some of the things that have kind of led to the market rally today, but also the worrisome aspects of what today showed. Now, again, up 0.71%. You'll notice the stock that led the day today for the S&P 100 was Tesla, up nearly double the second best performer, which is Adobe. Now, think about Adobe for a minute. Adobe just took it on the nose last week because they missed earnings, right? They missed the announcement or missed the average analyst estimate, and then they downgraded earnings expectations for next year. And when you look at that, you're saying, okay, yeah, that's not great, right? We just downgraded our earnings expectations, although it's still looking at about 9% earnings growth year over year. So it wasn't terrible. The stock is down a lot, and it's kind of one of those things that I kind of talked about last week. Maybe we do come around here. We saw that today, but was that good news that we saw last week? The answer is no, right? So we're up on really nothing, that it wasn't as bad as we thought. Or maybe it was bad, worse than we thought, but not exactly terrible. And so we're starting to see terrible being priced in positively. So for example, Tesla has to close a factory in China because of COVID. Well, guess what? Oh, we got a stock split announced. What does a stock split do for a company? The answer is absolutely nothing, right? There's no value that's created. Oh, well, people are more likely to buy their stock if it's at a cheaper price. The answer is that doesn't mean anything. You can buy fractional shares these days with most brokers. It means nothing. But the stock's up 8% as a result. What we're seeing right now is we saw the squeeze, and now we're seeing that last minute chase. We were squoze 2 weeks ago. We inched higher last week, and now we might be just squeezing a last little bit of juice here, and we'll see where things can get. As we look at it approaching 460, this is a really critical level. Notice I have a print put on here, 448.95. That was on the 22nd. It acted as resistance. Once you take that out, you expect to move to the next level, which in this case is going to be prior highs just under 460. Now, as we're looking at this, let's look at the VIX to see what the market's pricing in. As we look at VIX today, you'll notice we're surging down about 20. This is kind of an area I thought we'd probably get to with this rally in the market, and now we're suddenly here. As we look at the term structure, VIX 3M plus VIX, and what we're looking at over here, let's try this again, VIX 3M. It's a mouthful. And I'm going to add the pairs ratio study. This is a basic study in thinkorswim. This was today, actually was ticking lower before the market suddenly just reversed higher very, very strongly. We finished at about 1.23. What does this mean? It means that the 3-month VIX is 23% higher than the VIX. I use this as a proxy for the VIX futures. So if we come here to product depth, we go /VX. What we're doing is we're saying, okay, /VX. We're saying, well, how steep is this and how high is this? What's the forward premium? We're looking at 23 and potentially 24.6. We'll just kind of average that out around 23.7, 23.6. Go back to the VIX here. We're at 19.363, for example. We're approximately, about 4 points higher than the VIX is. So the forward premium is pricing at about 20% higher than the spot VIX. Again, this is a very pivotal point that suggests we're going to start to run out of steam here, and we might expect maybe a 5 to 10% correction in the coming maybe 3 to 4 weeks. And I realize it's not immediate. Picking tops in the market is really, really difficult. Okay, but what does this tell us? As we're approaching up here, what we're seeing is the expectations for future volatility are ramping up. Now, we're not going to be able to see the skew index number for today, but notice how we've been rising here. We're currently at about 138.34. Anything above 130 is high. Is just pointing to the downward skew in the market, meaning tail risk, right? Crash risk. But there's also the upside part of it. You're going to expect a higher frequency of small up days until eventually you start to realize the tail. That's that tail risk, that downside kind of crash risk here. Okay. And so right now, today, well, what added to the jubilation here? Well, if you look at oil prices were down about 9% today. Okay. And obviously, we're talking about, potential demand destruction, which is not exactly positive, right? Supplies aren't going to be increasing. All we're hoping for is that demand diminishes to the point that oil is not so scarce. But the risk right now, all we got to look at to really look at the direction or the expectation for oil is look at the term structure. Has it changed? The answer is what? The answer is no. We're seeing falling prices right now. So yes, we're seeing some volatility here. It's not as easy as it once was, but the risk in oil is still to the upside as we're in backwardation. We're implying there is a shortage, and there is a real shortage right now. So yes, we're seeing volatility ramp up here, but the reality is, yes, we might come back to 95 again, but the risks are still the upside. So we're getting a little bit of levitation in the market, maybe in part, and you'll see how it's kind of led today by XLY. Those are cyclical stocks, and we're going to look at one of them in terms of unusual option activity. But the point being is that the risk in oil is still to the upside. So you might be looking for these setups here. And when you look at XL, yes, it was the worst performer today, but guess what? It was the best performer last week. So we're seeing a little bit of a pullback today in XLE. Again, don't let it fool you. We may see this continue to rise, okay? Companies like Rig today, again, broke out on Friday. We gave back half of Friday's move, right? So just put in perspective here. Yes, we're down, but energy stocks are not wholesale selling off. They're not leading the market down in terms of breaking prior supports, breaking below Friday's low, for crying out loud, right? So anyway, so again, don't be too dismayed here. Energy may start to pick up again. Gold sold off, right? So gold was down about 1.82%. Again, the indication the dollar's rising. If we look at UP though, this is against the euro, and it was rising today against the euro. So rising in real terms in terms of what happened with gold, but rising in relative terms mostly against the euro/US dollar. And so what we're seeing today is that the market did fairly well despite the fact that dollar was increasing, and so probably held back some of the performance in the S&P because the price you're converting your dollars to S&P, SPY, ES, whatever, the dollar strengthened today and the S&P strengthened. So intrinsically gaining some strength. Again, I think we're looking around saying, hey, we got to play catch up here. And again, we're seeing stocks being squoze. I think today we're starting to see a little bit of optimism, but I'm not sure it's necessarily going to last. As we look at some of the worst performers today, you'll see ConocoPhillips, Altria, which is a tobacco stock. Again, this might be one to look at here as we're falling back. Again, Exxon. We got some financial companies in here as well. Capital One. We also got LMT. Again, defense companies, CVX, Philip Morris. Again, another tobacco company has not done quite as well as Altria has, but very General Dynamics. We got some industrial companies. We got some materials companies in here. We got financials, and we got energy. What we saw at the upside today is cyclicals, real estate, and technology. Again, I'm not sure this is necessarily going to last. We're seeing a little bit of short-term optimism. As you look at the bond market today, TNX is at 24.77. If you look at FVX, this is a 5-year. 5 years almost basically 0.1% above, 10 basis points above the 10-year. And you look at TYX is 25.73. We're almost seeing the 5 move above the 30-year Treasury bond. 5-year had a good auction today, but again, we are talking about a slightly higher yield. We're actually finished about the same we did on Friday. We're seeing the yield curve and begin to invert across the 10, 5 and 10, maybe close to 5 and 30 inverting. And again, we're talking about a Fed that is poised to raise rates aggressively. And again, for the bulls out there, you're wondering, how can you continue to be bullish when expectations in terms of Fed policy is changing so dramatically from almost 1 week to the next? This is 311, this is 318, this is this week. We're talking about what? By December, for example, we're starting to price in what? A 2.5% Fed funds rate. And then all of a sudden you start to see out here a little bit towards December of 2023, we're starting to see a potential for a rate decrease. Again, right now, again, there might be some jubilation thinking, hey, the Fed's going to raise rates a little bit and they're going to have to go right back to the trough. And again, it's a policy error and they're going to have to, inflate away. Maybe that is the course they're going to take. But the reality is right now we're talking about a very, very likely aggressive rate increase kind of trend with the Federal Reserve. And so if we look at it a little bit differently, using the countdown to the Fed tool here, let's go to December of 2022. We're talking about what? 40%, 23, and almost 5%. We're talking what? About a 67, 68% probability the Fed funds rates can be 2.5% or higher. 2.5 to 2.75% or higher. Crazy to think about, right? Does that start to diminish? Yeah, maybe as we get towards the end of 2023, early 2024. But the fact of the matter is, we're talking about a Fed that is expected to raise rates aggressively. That generally does not bode well for stocks. Now, early on it doesn't. But the fact that we're already inverting basically sets the ticker. We're looking probably the next 6 months of seeing potentially a major market top. And so again, we're talking about dovetailing with aggressive Fed policy raising rates that's going to approach these levels. It's hard to fathom that that's in the queue. Now, one that's in the middle here, we talked about, keeping your eye on is utilities. Exelon today did see a surge. Actually, the last few days, it's seen a surge here, a breakout. Today, there was some bullish activity on Exelon. It was a Jan expiration, so all the way to Jan 2023. Basically at the money, we're talking 300 days out. There's, again, didn't really move this stock a lot today, but some buying activity out there for the Jan expiration. Just shows that, again, there's some bullish expectations here. And utilities, for the most part, we'll do SPY plus XLU. And we'll look at the directional line here. And again, you're seeing that, for a few days last week, we saw it really favor S&P. And today we saw that the S&P only outperformed XLU very minimally. My expectation, we do see this continue down here and see utilities lead out the S&P as we kind of search for a top here in the near term. And I remember last Friday, I asked a lot of our TheoTrade members, hey, what was the best performing area of the market last week? Very few got it right, but it was energy. It was not technology. A lot of people, again, we kind of take our biases and we kind of project them. And again, what's the ability? What's going to move technology here? Obviously, we're talking about the top of the heap in terms of the S&P 500. Tesla's in there. Obviously, we've got look, we don't even have Apple, right? We've got Amazon in the mix there, breaking out today. Again, there's a limited shelf life here for some of these companies. I mean, maybe we can get back to the prior high, but I think that's the long shot that's happening. I think there's going to be some opportunities. You look at Apple, for example. Apple was basically up 0.5%, kind of getting stymied up to the resistance. Other areas are kind of just playing a little bit of catch up here. So again, you're not seeing the monsters of tech, obviously Microsoft and their well breaking out. Maybe playing a little bit of catch up as those were the worst performing of that bunch, kind of snapping back here. As you look at Goog, for example, Goog really didn't do a whole lot. If you look at Facebook didn't really do a whole lot today either. So now as we think about Tesla, again, I mean, battery technology, their gigafactories, all this other stuff, Quantumscape's an interesting one because, what does it take to replace a Tesla battery? Paying $20,000 for a new battery? When we talk about Quantumscape, this company, it's a forever battery. It's a solid state battery. And I'll tell you, since we came out with limited lithium ion batteries in the 70s, there's been this holy grail of what if we could develop a solid state battery? Apparently, Toyota Motor Company may be introducing a demo, or what do they call it? A model, not a production yet, but may have some solid state battery technology. Quantumscape is a company, development stage, losing money, right? But they produce a smaller sample of a battery that appears to be promising in the solid state space. Not much news today to go along with the breakout, but notice we're clearing the resistance over the last couple of months. The volume today was significant at 23 million shares. And Quantumscape specifically, you saw the 1 April expiration, 49,000 contracts, 10,000 contracts, mostly bought out there, out of the money. Again, weekly means it can be faded, right? This kind of maybe some day trading in and out throughout the course of the day. But again, it's one to watch as this thing could have some legs. If this is kind of that initial seed phase or seed wave, we measure this. Could we get to 161 at 21 or maybe 26 out here. Absolutely, that's a possibility if this positive trend continues. And if we take this last kind of downtrend here, kind of zero in on it, 38.2 sits around that 2374 area. So it might take a little time to get there, but it is interesting. We are seeing a breakout. Now, these breakouts sometimes fail, but you'll notice sometimes you get that breakout day and it makes a run, right? Makes a breakout here, makes a run, something to watch. And we have seen companies that do have higher short interest generate a little bit of positive movement over the course of last week. If you saw GameStop, for example, or AMC, the squeeze is on. This is when we talked about on Friday about looking at high short interest companies. These are a couple that we focused on. Up big today, 44% in AMC, GME's up 24%. And, I kind of missed that earlier in the day when I did my session, but kind of surged really substantially late. We're going from 170 to 190. So again, you're seeing these companies that do have high short interest getting squoze right now. And so again, it's going back to maybe some of that excessive bullishness. A couple other stocks, Rocket. So you wouldn't think that the Fed raising rates would have a positive effect on a mortgage company. And we are kind of scraping the bottom down here. We're consolidating. We're trading at a very, very tight range. We're looking to break out one direction or the other on Rocket. It was today in Rocket. It was a 1 April. Again, this is a weekly expiration, 14,000 contracts, mostly bought on the call side, spilling out to the 1149, 1199. Point being is what? There's a lot of interest building in Rocket, so you might look for a breakout. So if we start to trade through the highs here, that might be an opportunity to jump on board. Maybe we got a shot at getting back to prior high at 1323. But watch the floor too. Again, this interest, if it fails, we may see the bears come in and push it to the downside. Another company today, APP. This actually finished basically flat on today's session, but it was the June expiration. It's out there a little bit. It was a long call vertical, buying the 70, selling the 85. And if we look at a chart here, just to give you a sense of what sometimes the activity will produce in terms of movement in the stock. So we can flip this to a 1 minute. You guys notice this came in about 10:58. That happened right about there. Look at the surge in volume on the stock, the price movement, etc. Again, a company, it's probably not one you're trading options on, but could be a decent, actually, this one's probably okay. I mean, this has got okay depth, probably more of a stock trade, but another one here is we're going to wrap up with is Ralph Lauren, probably more of a stock trade in that one, but RL. So we talk about retail, or in this case, consumer cyclicals, kind of outpacing today. One of those companies, Ralph Lauren, up 1.4%. You notice we had this nice surge, not great volume, but light volume during the pullback right here. We're seeing it kind of break through this trend line here. Higher volume, closing near the high of the session today. And for Ralph Lauren, it was the April expiration, April 14th. It was an upside call spread, 120, 130 here. Again, not super far out of the money, although we were a little bit higher than we were earlier in the day, finished near the high of the session. Now, if we look at when this filled throughout the trading session and the impact that it had on the stock price, you'll see it evident right here, for example, to 857, 858. We look at a 1 minute chart here as well, 857, 858, right there, that big breakout, good volume. And then we had a secondary, so right here, big breakout, good volume. And then we had a secondary move out here. This is about 1050. That was this move right there, for example. And then late, we saw it come in as well. So point being is there was a lot of coincident option and stock activity today in Ralph Lauren. Maybe look at this thing getting back towards 130, which is prior highs. Not a terrible swing trade for a day like today. And finally, let's look at XRT. This is a downside play. And again, we talked about retail stock. We're talking about a consumer cyclical in Ralph Lauren, but we're talking about retail specifically. This looks like a bull flag setup. However, we didn't finish as strong today. The sector was up 2.6. This one 0.9. What we did see today was on XRT. It was a May 70. And so we're out here just a little bit. May 70, this is a put option down here, for example, 10,000 contracts filled in one print. Again, kind of interpreting this as probably a long put. It's a little bit uncertain, but again, I'd still argue that's a long put for the 20 May 70, which is down here near support. So watch for maybe a close or trade through today's low as a trigger. This could be a potentially decent downside opportunity. And a spread may make sense here, given the fact we are seeing, actually, no, sorry. It's kind of changed a little bit throughout the day, but I was going to say maybe a downside. So let's call, sorry, down here. Put, there we go. Downside put vertical may work. Some of these have some lower volatility targeting 70 out here. So buying this, selling that, or buying that, selling that. You get one that has where the volatility may be setting up rather well for a long put vertical to the downside. Well, folks, that's all we got for today in Monday's video. Look forward to being back next week. Thank you. Have a good one.